Okay. Can we start, Jay?
Yes, we're good to go.
Yeah.
All right. Perfect. Well, good evening, everyone, and thank you so much for joining us on this webinar on basic business structures. Hopefully, we can explain the basic structures that if you're in business or thinking of a business, not really sure, want to make changes to your business structure, hopefully, we can just break down all of the components that will be helpful in choosing the right one for you. So, regarding today, the topics will be first the business structure, the management structure, the protection, and of course, tax benefits. Most people are very, very in tune to finding out what are the tax benefits in each of the structures. And then factors to consider. We'll just kind of wrap it up and put everything together in one package. So, just as a brief introduction, we already know before setting up your business, you should really look at the structures. Looking at this webinar as informational purposes, this is not legal or tax advice. So please consult a business attorney and or your CPA or tax preparer to get the best solution for your business venture. Now, by selecting, there's a couple of important things we need to consider at
Miss
all
Ryan, your
times. Yes,
slides aren't changing.
they're not.
No,
Okay.
there
So
we go.
it's
It
moving
just
now.
did it.
Am I still sharing?
You're not sharing anymore.
All right. So let's try that again. Sorry.
It's okay. There was like, I guess, a lag in the connection.
Okay. Let me see if I can share again. Okay. Are we there? Sharing. Okay. You still can't see now, right?
No, not yet.
Okay. So let me see. This is weird. I'm seeing it on my screen. Let me just attempt to not share again. Hold on. Cancel it and then restart it. Now it's not getting to the screen that I need. So hold on, let me just open up again. And my PowerPoint is just reloading. Okay, let's see if this works now. Okay, so it's open again. All right, let's see if it works now. It's actually not coming on. I don't know. I am trying to share, but it won't allow me to share for some reason.
Jay, is there an ability you need to give? I'm not sure if there's something got messed up there.
Because the PowerPoint is on, but I'm not having the ability to share.
Do you see the arrow at the bottom of your Zoom to share your screen?
Mm-hmm. Yeah, I'm
When you
seeing the
click it,
windows, but the PowerPoint window won't allow me to share.
Oh,
I'll cancel and restart. No, it's just still not allowing me to share the window that's up because I do have the screen, the PowerPoint presentation up. Okay, wait, let's see here. Let's see. We could just. I'm not sure why that's happening. Because it kind of flashes and then it goes away. I don't know. I'm not sure what's going on here.
yeah, I think there's maybe a connection issue, and that's probably why there was a lag.
Okay. Do you want to use the slides that you have? See if you can share it that way.
Yeah, let me make sure it lets me share.
Okay.
Can you see the slides
I cannot.
Yes.
now?
Yeah.
I can't see them. Okay. I'm somewhat seeing them.
Does this help? Do I have to zoom it?
um, okay, I can somewhat see it. All right. I guess we have to try to figure this out. Let me just see if it will let me do it again.
If
No.
you want to read it from your screen, and I'll just share it on my screen, so everyone else can see it, we can do that too.
Okay. So, right now, is everyone able to see the screen on the introduction or selecting the business?
Yes.
Okay, perfect. All right. So, all right. So let's go with the selection. Sorry about that. Let's try that again. So selecting a business structure, the most important step again is to consider when you're starting a business. There's some key aspects or components of the business that you need to kind of think about. Is it right for you or is it not? So there are 5 popular business structure types that we'll go over today, and we'll learn more about them momentarily. Okay, so defining a business structure. So, what is a business structure? It's a legal presentation of the organization. It defines who owns this company and how profits will be distributed. Changing your business structure can be easy, but sometimes it could be very restrictive, but of course, costly. So, it's important to understand the different types of business structures before you make that decision. Okay, next we're talking about just the selection of your business structure. So, why and how we're going to select this would actually affect several different factors. So, for one, the day to day operations, how much you pay in taxes. Again, that's a very common thread. The amount of paperwork that you may have to just register the business, the risk of personal liability, which is very important to consider. And if you're looking to grow this business, the ability to raise capital and raise funds is very, very important when selecting what type of business structure is appropriate for your business. Next, we have the 5 most popular structures. One, the sole proprietorship. Number 2, a general partnership. Number 3, a corporation or a C corp. Number 4, an S corp. And then number 5, we can kind of compare and contrast a limited liability company with a limited liability partnership. And then, of course, there's like pros and cons for each and every one of these options. Again, you would want to consult an attorney and or an accountant to see which one is best for you. Okay, so now we first want to look at, before deciding which path to go, informal versus a formal business structure. Now, when we're talking about an informal business, the first one comes to mind is a DBA or a sole proprietorship. And this is when someone is doing business. Let's just say you're selling T-shirts, you're doing hair, you're doing lashes. If you have a business as such that's a service instead of selling products, you do not have to register the business. You can just pretty much be doing business from your home or what have you, and that would be, you could be considered a sole proprietor. You're very low risk there, and you're usually familiar with who your customers are. However, there's no asset protection in that type of business. And then second, another form of general is a general partnership that is also an informal business structure, low risk again. Sometimes you're very familiar with who your customers are, and also to no asset protection. Then we could switch over to a more formal types of businesses, which is really when you're working with a mid to high risk type of business, you're looking to grow this business a little large. And a lot of times you're not even familiar with your customers or your clients, whether they're online, whether they're face to face. There is asset protection, credibility, and you have a higher probability of raising capital with these three form of business structures. That's a C corp or corporation, an S corp, and then the limited liability company or limited liability partnerships. So we have informal versus formal. Next, when we start to dig a little bit deeper, we'll start with the informal. So the sole proprietorship. Now we'll talk about control. So with a sole proprietorship, as I mentioned, let's say you're selling t-shirts from your house. You are the sole owner. You have all authority within this business, and you make all of the business decisions and of course collect all of the profits and or take on the risk of all the losses. This form of business partnership or business structure is very easy to start up. It does not require you to fill out any forms or pay government fees. The process is simple and it's cheap to do. As far as tax reporting, because the business legally is not a separate entity, your personal income taxes are to be considered. Your business expenses and the income is all on your personal taxes. As an added benefit, you can use the business losses to balance out some of the income that you do earn. As far as privacy, a sole proprietorship, you are not required to file any annual reports about your finances, your losses or gains with the state or federal governments. Therefore, your business won't be subject to any public disclosure, as you might with other business structures. So again, this is very informal. Number two, as far as informal business structures, we have the general partnership. This is also very easy to start up, does not require filing paperwork with the federal government, although some states you might have to fill out state paperwork. Few tax forms, again, in a partnership, the business does not pay taxes on its income, which means you don't need to file a business tax return. Instead, all of these profits and losses pass right through your individual partnership's personal tax returns. Now, as far as shared finances, now if you have a partner, you share in the burden of all the costs to start up this business, business overhead, and also banks also are more likely to offer you money because you have multiple owners with multiple assets and or multiple collateral. And it can really help you in those early stages of financing the business. So of course, two people or more are much better than just one. But of course, there are a lot of pros and cons to that. Combined knowledge, again, you might have an expertise in selling or sales, and your business partner might be a marketing expert, right? Reasons to go into a partnership, those similar or different skill set that you might have, and important decision making you should actually think about before starting the business. Then we have the formal business structures, and we'll start off with the C Corp. Here you have liability protection. Remember, with the informal, there are not a lot of protection there. So owners are not responsible for the corporation's debt. So personal assets such as your car, your house, your savings, your investments, your retirement accounts have protection. As an independent entity, this corporation is independent. It has a separate tax ID number. It's set separately from your personal social security number. the corporation can file and receive lawsuits. But you are not liable for such legal actions if you're in that corporation. The business entity can continue. So corporations are based on ownership and percentages of stocks that might be held within that business. So if someone leaves, they can sell their shares. This does allow for more flexibility in transferring the ownership if you have a corporation. Quick for capital. Corporations can raise funds again by selling corporate stocks and offering shares as an employee benefit, which you heard of stock options. This can help grow the business and support in times of needs. Now, the negative. In terms of tax exemptions, although owners pay a double tax on business earnings, corporations can deduct certain benefits that they may provide for their employee, such as, like I mentioned, retirement benefits, 401k, matching contributions, health, and any other type of insurance premiums, life insurance, and other related expenses you can deduct. Another formal business entity is the S corporation. When you form this type of business, again, you're talking to your tax advisor and or your legal advisor. There's no double taxation. So what do I mean by that? I mean that the business profits and losses pass directly to the shareholders' personal income tax, and that's where it will appear. This means that an S corp has one level of federal taxes to pay, and the shareholders are not subject to corporate taxes as well as we do in a C corp. As far as liability protection, the shareholders are not personally responsible for the business's debt and or liabilities. This lets them protect their personal assets, such as their bank accounts, their homes, from creditors. Simple ownership transfer, again, an S corp is an independent entity, right? It would have its own tax ID. Shareholders can sell their shares without any tax consequences. Businesses can also continue to run undisturbed when the shareholder may lose, or you may lose a shareholder here and there. S corps, though, cannot have more than 100 shareholders. So this means they cannot go public. They cannot be like the Apples of the world, the Samsungs, the larger companies that are, on the stock market and publicly held. So they have some limited ability to raise capital from new investors. There are some exceptions, but normally the shareholders must be an individual, can't be a corporation, and be also to a U.S. citizen or residence. As far as accounting, it's a cash method that is used. Sometimes you might use an accrual method in an S corp if you do not have any inventory, but that is another tax strategy that you would speak to your accountant to see if that made sense for your type of business. Now we have the LLC or the LLP, right? Limited Liability Corporation and the Limited Liability Partnership. We're going to compare and contrast the two and just kind of see what similarities they may have as well as what differences they may have. So if we talk about the limited liability first, it's kind of like a hybrid business structure where it takes advantage of two different types of structures, the partnership and the corporation. You can set up an LLC for your business by filing some paperwork with the Secretary of State in which you plan to do business. This structure may work well, again, for a medium to high risk level of business that wants some type of personal protection, or you're looking to pay lower taxes than a corporation. Now, here are some of the advantages of an LLC. So it already says in the name, right? Limited Liability Corporation. Because an LLC is an independent entity, you are not personally responsible for the debt or lawsuits against this company. If the business goes bankrupt, your personal assets are also protected. So although you may lose your initial investment in getting into this business, whatever it took for you to kind of get the business up and running. As far as pass-through taxation, rather than paying corporate taxes, companies' income and expenses again pass directly to the owner's personal tax returns, and they can actually use that as far as the income, as far as profits and losses. The owner also too is considered to be self-employed, so they have to claim self-employed, or they can claim self-employed tax credits, but more importantly, they are responsible to contribute to Medicare and Social Security on their own when they pretty much pay quarterly taxes or tax estimates. As far as adding participants in an LLC now, you can have an unlimited number of shareholders. Those shareholders can be fully participated in the company, and they can also to operate the company. There also too are more flexibility in terms of management in this form of corporations. So a corporation then, on the other hand, uses a board of directors that oversees the policies and officiates the daily management of the business.
Your
So
audio cut out for a moment. Can you just go right back over that?
okay. So an LLC, the advantages of an LLC, it's a limited liability company. And because it's an independent entity on its own, you are not personally responsible for the debt or any lawsuits against this business. If the business goes bankruptcy or get bankrupt or file bankruptcy, your personal assets are protected, although you may lose again your investment, your initial investment. As far as pass-through taxation, rather than paying corporate taxes, again, the company's income and expenses pass right through your personal tax returns. Because you're considered to be self-employed, you have to pay your own or pay into Medicare and Social Security on your own, and you may be able to claim, of course, self-employed tax credits. With an LLC, some of the other advantages are there are an unlimited number of shareholders that you can have. So there's some flexibility in how you also to manage it. Other than really when you have a corporation, there's a board of directors that kind of oversee all the policies and officiate for the business on and the daily operations of your business. So with an LLC, there's some flexibility there with the operations day to day. Also, too, flexibility in distributing the profits. Unlike a corporation, an LLC can decide how they want to divide their profits. So, for example, a shareholder who contributes a significant amount of funds during the startup phases of a business, they may receive more profits than someone who has equal shares of ownership in that agreement. Now we're looking at the LLP, or limited liability company. Limited liability partnership. Even I'm getting a little mixed up there. It's really a general partnership that we're talking about. It can be two or more individuals that own this business, but there's no maximum number of partners that you can actually have. In fact, some of the very large companies that we know of and very familiar with, they are LLPs, or limited liability partnerships. Some similarities, it is similar to an LLC, that it crosses between a corporation and a partnership, with the partners enjoying some of the limited personal protection or liabilities. It's different from an LLC. An LLP must have a managing partner, right? What does that mean? Someone's in charge, someone who's liable for the actions of these partnerships. If you're a silent partner or an investor, and you do not assume any managerial roles, they do receive some type of limited protection as well. Currently, about 40 of our states do allow the formation of an LLP, or limited liability partnership, and it would vary from state to state. So one thing you want to do is, look in and do some research to see the state that you want to operate. Do they allow an LLP? Okay. Now we're looking at some differences in the managing structure. So of an LLC versus an LLP, limited liability company versus the limited liability partnership. So, two common managerial structures. So, in an LLC, the members can manage the business themselves, each share some responsibility in running this business, or they can hire or appoint one or more member or even a non-member to manage the business. Whereas an LLP operates like a general business partnership, the managerial duties have to be equally divided among the partners. So that's where a partnership agreement should be set, and it kind of dictates how decisions are made within that partnership. Some other differences in terms of the protection: an LLC versus an LLP. Again, both LLC and LLP provides members and their partners with a limited liability protection. With an LLC, members are protected from their personal liabilities for business debt or any claims against them. That means that a creditor cannot sue to recover the member's personal assets in an LLC. Members can lose, of course, monetary investment, but if members commit an act that is legally accountable, both the LLC and its members can also to be held accountable. In an LLP or a partnership, each LLP member can be personally liable only if they're on their own negligence. Excuse me. So if you have several partners and one partner does something that's unethical or illegal, the partners are not liable for other partners' mistake. Only the risk that they take would be pretty much that investment that they made within that business. In some states, partners in an LLP can be personally liable as well. So we could check from state to state to see what that looks like. But some LLP members buy malpractice insurance to protect their partnerships and other partners against losing their investment in an LLP due to the LLP's failure. So you can buy some type of malpractice insurance. Some of the differences and tax benefits are the LLC and the LLP are not recognized as business entities by the IRS and do not pay income taxes. Each is required to file an informal tax returns. And then another side of the tax benefits: unless the LLC elects to file a corporate tax return, it is treated like a partnership. Again, it's going to go right through your personal taxes. In a partnership, the business earnings pass through, again, the partner's personal taxes. Profits and losses can be written off there. In an LLC, you do avoid the double taxes. So again, another benefit for having an LLC than a regular corporation. One person LLC is a sole proprietorship, and a member must file self-employed taxes, each member rather. The states require the LLC to file a state tax return. Some states do, some states don't. Some states also don't allow the pass-through taxation, and they impose a state franchise taxes on the LLP. So again, a lot of ins and outs. Really why we urge that you do speak with a tax advisor or your tax professional to figure out what tax advantages you would actually benefit in the structure that you do select. Some factors to consider, again, when you're actually designing this business structure or your business endeavor. One is the control. So let's just look at the control first. If you want primary control, consider a sole proprietor, right? It's just you control everything. Or an LLC, a limited liability company. You can still operate one person in that LLC. Partnership, if you want to bring in others, that's another business to consider. But you can also to make sure that you detail in a business partnership agreement, how the control would be spread or the decision-making process would go. And corporations, they require a board of directors. So they are the people who dictate the control of that business. So that is very, very important. Like, how and who do you want to control the business and the decisions? That would actually predicate which business structure is best for you. And then we talk about capital investments, another consideration. Corporations can raise funds, and they're a nice way to start if you're looking to go big with this business idea. Investors and bank loans are given. You can sell stocks within the business to secure loans as well. And while a single proprietorship would be using his or her own credit to really establish credit initially with the business, and the limited resources that an individual would have could also to limit their ability to grow or expand or raise capital. The other thing is not allowed. The businesses do not have any personal asset protection with that sole proprietorship. Then we talk about flexibility, right? If we try to review your goals for your business, you want to compare what structure is best. Again, do you want flexibility? Do you want to go large? Do you want to go small? Which type of business structure has limited flexibility? Maybe you do want limited flexibility, or maybe you want a lot of flexibility. And as far as the complexity, very, very simple. A sole proprietor, like I mentioned, you can just start selling t-shirts. You can start, doing hair, whatever the business or the skill that you do have. You can start that as a sole proprietor. Not a lot of protection, but a lot of flexibility. Very limited with funding as well. As far as liabilities, a corporation has the least amount of liability. So they're very, very protected. That's a corporation and a limited liability company. Creditors cannot go after your assets if they're looking to sue you for whatever reason, or the business cannot pay their bills. You have that protection. As far as taxes, which is always a big consideration, sole proprietorships and LLC, they pay their taxes through their personal tax return, while partnerships claim their shares of the profits on their personal income taxes. And corporations, of course, they're filing their tax returns and they're paying taxes on their profits within the business. And they have sometimes, of course, some flexibility, and they get a chance to write off some of the tax expenses or exemptions that they may have for benefits that they're offering to individuals that work for them. So again, it's a lot that we're looking at when we're talking about the business structure, and a lot to consider. And it's not like an easy answer, but certainly sitting down with a professional can help you decide that. And that's the drum roll. Just wrapping it up, informing your business. It can be relatively easy. Just filing some paperwork could be very simple, very, very complex if you're starting a corporation, but you always, again, want to check back with your attorney to get guidance and or your tax professional. Also, you want to check in with your state to see, legally, can you operate that entity in the state based on the type of business that you're really starting. Some things to definitely consider. I would like to open the floor, if we are opening, and I'm not sure, Jennifer, to any questions. Um, if not, or in the chat, I think that might
Yeah,
be another option. Okay.
we can open it for questions. So anybody
Thank
can
you.
unmute or raise your hand or type it in the chat or Q&A, and we'll get to your questions.
And thank everyone for your time tonight. And hopefully I could answer some, if not all of your questions in breaking down each type of business entity.
I don't see any questions popping up, but it could take a minute to type. So I'm just going to wait for a second just so I can uh, make sure I'm not missing anything.
Yes. And I don't know if we have other topics that maybe we can share while we wait for others to come out with questions. On our workshops, we usually offer webinars on a weekly basis, if not also to face to face.
Definitely. Following this presentation today, this Saturday we'll go more into understanding the tax structures for the different the taxes between the different types of business structures. So we'll have that and this Saturday in person, and we will also have this Saturday in person using social media website designs and Canva for branding your business to increase the growth of your sales.
Okay. Well, and what time are those webinars on Saturday or the
So
seminars
our branding webinar, our branding in person
in
workshop,
person?
it's
Mm-hmm.
hands-on. It's from 9 a.m. to noon. And our understanding the basic business tax structures will be from 12:30 to 2:30. So you can attend both. Both of them are in person at the Suffolk County Community College Grant Campus. I do see a question. It says, what is the best company type when you are a one-man show? Is it an LLC?
Okay, very good question. Thank you for that question. I think that the most important things to consider is the liability and the type of business that you have. So it could be a one-person show and still be a corporation if you're looking to grow this business in the future, right? You can still operate as a sole proprietor as a one person, but if you do want that protection, and that's very very important, you should incorporate, whether it's a C corp, S corp, or an LLC. You should consider that depending on the liability. So you're selling food, you have a restaurant. Certainly, someone eating food from your restaurant or someone eating food that you might be preparing, let's say cookies or cakes from home, and you're selling them because you are allowed to do that only at home. So not in an industrial kitchen. Let's just say you're selling cakes right from home. Someone can get sick with eating or digesting your cakes. So you do want to have some type of liability again or protection involved there, even if it's a one person. We just can't say one person should be LLC. There's other type of uh, things to consider. Like again, do you plan to grow this business? If you're planning to just stay one person and never really hire anyone, LLC might be the best place to start for sure. Hopefully
Okay.
that answers the question.
We do have another question.
Okay, awesome.
Is the new administration proposing a reduction in SBA taxes?
So that is definitely a question for your accountant because obviously there's so much going on with the new administration. It's changing by the minute, I would say. So the tax advisor would kind of know what's the top, what's happening right now as far as changes between this year and last year, what's going to happen with your taxes for 2025. So I would definitely leave that to your tax advisor to answer. Unfortunately, I can't give advice in that area. But thank you so much for that question.
Thank you. I do have another question.
Okay, awesome.
If I'm using my vehicle for my consulting business, do I get a write-off for my car?
Okay, so that's another good tax question. So it just depends on what percentage are you actually using. So it could be, 90% of the day, 70% of the day. So what happens is your accountant would actually account for that. Like you would be logging and you might have an app that you can do that. So let's say you travel 20 hours a day and only 10 is really of your business. So depending on the mileage, you can write off a certain percentage of that as far as the expenses of the car and the wear and tear. And sometimes people do use a personal vehicle, even though it's not a truck or utility vehicle, for their business. And again, exclusively for the business, then that is definitely a write off.
Thank you. I have another question. If you are trying to manufacture a product, what would be the best suggested business structure?
So that again might go back to the whole tax concept. So if you're going to be the manufacturer of the company, again, is this going to be a very large company? Is it going to be a mid-sized company? In most cases, if you're manufacturing, you may not know who your customers are, and it would be more like a formal structure where it could be one of the three, right? It could be an LLC, it could be a corporation, or it could be an S corp. So those three, the taxes is going to really drive it. And again, how much revenue you're going to be bringing in with that business. Do you have an accountant or a tax advisor now?
No.
The person, okay, all right. So that might be the first step. And again, we do at the entrepreneurship program, we're not accountants, but we do work with other professionals that might be able to guide you in those areas as far as legal and or accounting. That could actually help answer the question a little bit more concise on an individual situation.
Thank you. I have another question. Do veterans receive any discounts on bank loans?
Oh, very good question. So, discounts. So, usually there are a lot of programs for veterans in terms of encouraging them to start businesses. We do have a lot of programs for them, or within the entrepreneurship program. So, if you are a veteran, definitely try to give us a call, and we can see how we can support you in your endeavors. Sometimes there are grants that are out there for for veterans, and that might be another vehicle depending on if you want to open a non-for-profit organization or not.
Thank you. Do you have to
We
register?
do work with,
Sorry, go
sorry,
ahead.
I was going to say we do work with lenders or small lenders and financial institutions that will help a small business. And depending on if you're already up and running, it's very, very challenging to get a startup financing. Of course, there's no track record. It's all based on the person's personal taxes and their credit. So it could be very challenging for a startup. But if a business that has a track record and some type of history, tax filings, that's why it's very, very important that you do show profits if you're looking to expand this business and become, larger, right? Banks and financial institutions want to see financials, and they don't want to see losses because they think of it as just a hobby, not necessarily a business. So how can you pay them back if you're losing money consistently?
Thank you. Um,
Mhm.
do you have to register a business if you plan on just doing drop shipping?
So again, it just depends on if you're going to, act as a sole proprietor. Because if you're a sole proprietor, you really don't really have to register the business. If you're going to incorporate or have a more formal business, then you do have to file with the state and as well as the government. So it just depends if you're looking to be a sole proprietor or you're looking to actually have a corporation. No filings with a sole proprietor.
Thank you. That may partially answer the next question. If I want to be a sole proprietor and file separate from my personal taxes, can I register my business as a sole proprietor?
So for sole proprietors, it all goes through your personal. It's all through your personal taxes, regardless, because you don't have a tax ID number. You're just, an individual doing business. So you're not a separate entity. It's all going through your personal taxes. So you would be showing the profits, and then the good thing about that, you can write off some losses, some eligible tax write-offs throughout your business, whatever the expenses could be, whether it's a cell phone, whether it's travel, whether it's meeting with clients. So there are things that you can write off, but it will go through your personal taxes. There will not be like a separate tax return for a sole prop.
Thank you for that. I'm just waiting to see if any other questions come in.
Yes.
I'll also be putting our contact information in the chat. So if
Oh, yeah.
questions arise later, we can you can reach out to us and we can follow up with you.
And also, too, we do offer, and I do offer technical assistance to help clients that if you had not started the business yet, you're thinking of the business, um, your New York business as well. There are a lot of different opportunities and funds that could be available if you are a New York State business. We do have the technical assistance where we can meet one-on-one to help you with your business plan. If you're looking to expand, go to a bank or an investor to get loans. And that could be expansion loans. If you're in business already for at least 1 year, possibly becoming certified with the government to, bid on government contracts. We do help in that area as well for small businesses.
And just a note, if you are a veteran and you are running a business, you can get veteran business certification as well. That may be something you want to go after because that may open you up to more opportunities specifically for veteran run businesses.
Right. Veterans do like to do business with other veterans, so it's important to be certified as a veteran owned business, just as you can as a woman or a minority business as well.
All right. It doesn't look like we have any other questions popping up. So I want to thank you so much for your time. I want to thank everybody for being patient with our technical
Yes.
difficulties.
Yes. Thank you. I'm so sorry about that. But thank you, Jennifer, for assisting us in getting past that.
Of course, definitely. I
And
hope
I look
everybody has,
forward to seeing
oh,
everybody again. I'm sorry about that.
yes. I hope everyone has a great evening. Thank you so much for signing in, taking your time, and asking wonderful questions.
Yes. And good
Have,
luck to all of you.
yes, have a fantastic evening, everybody.
Okay. Good evening.
Good night.